Let me now bring on board Manwa Ann, Head of Emerging Market Strategy at Societe Generale. He joins us. Manwa, good morning. Thank you for joining us. How do you really see the current strategy which is being followed by Bank of Japan in terms of a monetary policy, and what do you think the BOJ policy, and how do you think that will impact rather Asian currencies?
The Bank of Japan monetary policy is a major risk for Asian currencies because essentially what it does is it raises the issue of currency valuation in Asia. In the context of very poor growth backdrop, of course, a number of currencies are subject to severe risks, especially with the yen on a strong depreciation path. So yes, in a way you can call that a currency war. I call that a competitive devaluation race. And right now it looks like Asian currencies are losing the battle against the yen.
What about the rupee? Because that's been weak due to the dollar strength. What's your outlook on the Indian currency then?
I'm bearish on the rupee both tactically and potentially over the medium term. We are in a strong dollar environment and that is the major driving force of Asian currencies at this point, including the rupee. So I see a risk of going to perhaps all the way to 57, 58 tactically. Medium term, well, it all depends on the speed and the credibility of the reform program. Right now, the early signs are not exactly positive, so I would be tempted to be also bearish on the rupee over the medium term.
So how do you see rupee shaping up in the near term and towards the end of this year? As India would be nearing elections, do you see fundamentals of Indian economy supporting the rupee?
Well, I'm very concerned about the policy framework here, given the lack of speed and the delay in implementing the reform program in a forceful manner. Therefore, I can see some depreciation of the rupee going through. So I'm bearish there, medium term. End of the year, we could say maybe 57, 58 or 59 even against the dollar. Not very good.
But the dollar has been gaining in strength. Your view on the dollar and the economic recovery likely in the US?
Well, this is the major question for global markets right now. We are seeing signs of strength in the US for sure. But I would say the strength is going to really materialize quite forcefully, in fact, in the latter part of the year. I'm not going to jump the gun and claiming that the US is on a strong recovery at this point in time. In fact, maybe in the near term, there might be a risk of disappointment. But clearly, the momentum is going to pick up, and the latter part of the year is going to show some signs of a strong US economy.
What is your view on global liquidity and monetary easing, and how do you see capital flows to India, shaping up for the rest of the year?
Well, we have an interesting situation here with the focus shifting in the US on the retrenchment of global liquidity. But the reality is elsewhere, we're still very much in easing mode. So we've got some interesting divergence of monetary policy trajectories there. At this point, I'm not overly concerned about the outlook for capital flows into emerging markets, and I remain constructive, especially on EM fixed income.
So what about your outlook for emerging markets? Do you continue to see the money flowing into these markets, given the kind of strength that we've seen in the developed world?
Well, when we talk about emerging markets, I think it's important to make the distinction between various asset classes. EM currencies, I'm very nervous, I'm very bearish. In fact, right now we're in a dollar strength environment. We are in a disappointment on global growth environment, and that the combination of those two factors is very negative for EM currencies. I'm going to favor EM fixed income because I don't believe that, at least for now, the correction in US Treasury yields is a major risk for emerging markets fixed income. In fact, I would call that a buying opportunity. relatively short term. And of course, down the road, we have to keep watching how the US economy performs to assess whether we need to change the view.
Finally, there is a lot of noise about Fed scaling back its stimulus program. Do you see this happening sooner than anticipated?
Our call is for September to be the major turning point here. So that's coming fairly soon, but it's a call that is data dependent. In a way, the Fed itself has made it clear that we need to see stronger data in the US before they actually start engaging in policy action.
Benoit, good having you on the show. Appreciate you taking the time out and joining us today on ET Now.